Stephan is more or less the face of personal finance here on YouTube, whose shocked thumbnails have generated him tons of views, earning him millions of subscribers in the process. But he's also a massive sellout who's going to cost you tens of thousands of dollars. So let's dive right into this. Now don't get me wrong, I do watch his videos, and I'm sure his easy to digest videos helped lots of his subscribers. But he said something in this most recent video that just rubbed me the wrong way.
Interested in building our wealth in cryptocurrency, our video sponsor today, Wealthfront, aims to help you do exactly that.
That's right, he got sponsored by Wealthfront. I have a big issue with that. Now to be clear, I'm not against sponsorships because it's a great way for YouTubers to earn additional income that's not dictated by the almighty YouTube algorithm. But what I am against is creators accepting money to talk about products and services that they personally would never use. I mean, just look at Raycon and how you never see any YouTuber using them after they finish their ad read. In the same way, I'm exposing Stephan for recommending Wealthfront to you, all of you loyal subscribers who probably got triggered from the thumbnail and the title, because he wants you to use Wealthfront while he himself would never be caught dead using it. And you don't have to take my word for it, because Stephan, he makes that perfectly clear in multiple videos. But first, let's figure out why Graham even started talking about Wealthfront, or aka, how much did Wealthfront pay him to get in front of your eyeballs? Now to be fair, Graham, he doesn't take on a lot of sponsors because he says,
but I will say I do turn down about 99% of sponsors that come my way.
And while he won't specify how much Wealthfront paid, we can do some calculation based on Graham saying that.
In terms of a more specific answer though, the value of most sponsorships ranges anywhere from $10 to $120 per 1,000 views based on the average number of views you get per video.
So, he gets roughly 450,000 views per video, and from that we can more or less assume that Wealthfront paid him between $4,500 to $54,000. As of how much Graham makes in total from his sponsors,
now, as far as how much I've made from sponsorships, I will say it's over $100,000, but it's less than $1 million.
Now, let me be clear. I have no issue with sponsors. Hell, if someone offered me $54,000 to do a 1-minute ad read, I'd probably do it too. No. The issue I have with Graham comes right here during its Wealthfront ad segment.
And not to mention, best of all, if you smash the like button for the YouTube algorithm, they're going to be waiving their 0.25% annual management fee up to the first $10,000 for the rest of your life just by using the link down below in the description.
Did you catch that? Because let's hear it a few times.
0.25% annual management fee, 0.25% annual management fee, 0.25% annual management fee.
That's right. Stephan, who only buys clothes on sale at H&M, who only drinks his 20-cent iced coffee, and who takes other people's leftovers home, and who doesn't heat up his Las Vegas swimming pool even for a guest, is recommending you a stock brokerage that charges a 0.25% management fee while he does the exact opposite. Because in this video, he talks about the best ways of earning passive income.
Of course, I can't make a video on passive income without talking about the grandfather of all of them. The easiest way that you could begin making passive income with as little work as possible, and that would be through an index fund.
And in case you couldn't tell, Graham, he really loves his index funds.
I like equities like stocks or just a broad index fund like VTSAX or VFIX. That's what I've done with over 50% of my entire stock market portfolio. I just buy into the S&P 500 consistently and that's it. My plan this year is to invest about 85% of my money in an S&P 500 index fund and that's it. As of right now, I have just over $1 million invested in an S&P 500 index fund. It makes up more than half of my entire stock market portfolio, and it's something I'm consistently buying into every single week, and that would be the S&P 500. That's why I've allocated about 20% of my entire stock market portfolio to an international index fund. A large portion of this account is dedicated to a simple broad market ETF, and that would be SCHB. This one covers the largest 2,500 publicly traded companies in the US with a really low expense ratio of just 0.03%.
Did you catch that last bit? Graham, he loves these broad market index funds because of their low expense ratio of
0.03%.
But he wants you to pay Wealthfront's 0.25% advisory fee. Now VU, which is Vanguard's S&P 500 ETF, this is the one that he talks about constantly, and wouldn't you know, it also has a
very nominal expense ratio.
Do you see what I mean now? In non-Wealthfront sponsored videos, he's like, go on and pick the one that only charges you 0.03%. But when Wealthfront pays him $54,000, suddenly it's okay to pay a 0.25% advisory fee. I mean, this hypocrisy is most telling in this the best 5 index funds that will make you rich video, because the biggest criteria of how he ranks them depended on their expense ratios. In 5th place,
VFIX also has an expense ratio of 0.04%.
I mean, it's still better than
0.25% annual management fee.
In 4th place,
just like the last option, there is a 0.04% expense ratio with VT Sachs, and there's a 0.03% expense ratio with VTI.
At least it's not
0.25% annual management fee.
In 3rd place.
The second difference is that this one only has a 0.02% management fee.
So much lower than Wealthfront's
0.25% annual management fee.
Runner-up, we have
this index fund has a 0.015% expense ratio.
Whoa, that's almost 17 times lower than Wealthfront's
0.25% annual management fee.
And the number one best index fund that will make you rich, we have.
Here's the other thing. Unlike Vanguard, which has a 0.04% expense ratio, FISROX has no expense ratio.
So in other words, unlike Wealthfront, which has a 0.25% advisory fee, this one is.
That's right, it is entirely free.
And right here you might be thinking, what's the big deal of paying a 0.25% advisory fee? It's so little. But you have to remember that compound interest, that magic that snowballs your portfolio, it also compounds the fees that you're going to be paying. And Graham knows this because in the same video he says this.
Or in other words, you're saving $2 per year per $10,000 you have invested. But hey, if you have $1 million invested, that's a savings of $200 a year in management fees, and that extra money could buy you 2 $100 bills.
And he also says this.
Sure, it might only be a savings of 50 cents per year per $10,000 you have invested, but every penny counts.
And if you're just wondering how much an annual fee can potentially grow to, Graham got that covered as well.
I'll admit, I love Vanguard, but once you start getting more and more and more money, that expense ratio begins to add up. Like Fidelity is going to save you $400 a year per $1 million that you have invested. And that $400 a year is worth potentially $21,000 in 20 years from now invested at an 8% return.
So to recap, on $1 million portfolio that's investing in the Vanguard ETF that charges you a 0.04% fee, you'll be out $400 a year. If you have that same $1 million, but you use Wealthfront and you pay them their 0.25% advisory fee, you'll be paying them $2,500 every single year. I mean, you think $21,000 is a lot of money? Do the same calculation, and that tiny 0.25% fee you pay to Wealthfront means you're going to miss out on $135,210. And if you go to Wealthfront's website, they actually have an advisory fee calculator where you can move the account balance to see how much your monthly fee is going to be. They act like this calculator is doing them any favors. But anyway, if you put $5 million with Wealthfront, congratulations, you're now paying $1,041.67 per month or $12,500 a year for Wealthfront to just rebalance a few index funds for you. But you know what's even worse? The 0.25 advisory fee isn't the only fee he'll be paying, because right above that calculator bit, you see Wealthfront advertised so proudly, our fee is simple. There's only 2 costs, the 0.25% advisory fee and the expense ratio between 0.06% to 0.13% you pay to the funds in your portfolio. I think it's a bit misleading that the calculator, it only shows the 0.25% advisory fee, when in reality, it should say something like between 0.28% and 0.38%. If you do that, you're now paying between $14,000 to $19,000 every year on your $5 million portfolio if you choose to go with Wealthfront. Oh, but do you know what's even worse than that? You scroll a bit more up and they basically tell you what index funds they're going to be buying. So instead of paying tens of thousands of dollars because of Wealthfront's 0.25% management fee, you can click around here and create your own index funds. preferably by using M1 Finance, which is an awesome stock brokerage I use. And if you want to give them a try, they're going to be giving you $50 totally free. And the best part, there's no 0.25% advisory fee that they're going to charge you. So if you want to give M1 Finance a try, link is in the description below. But anyway, going back, it's also ironic when Graham, he recommends a more actively managed stock brokerage when he tells us in video after video how dollar cost averaging into a broad market index fund beats the majority of actively managed ones.
Seriously, if all you did was just buy into a total stock market index fund and then wait 20 years, you will have outperformed most active hedge fund managers, and you would put yourself in the best financial position possible to make the most amount of money. The advantage of doing this is that index fund investing has outperformed 95% of active investors over a 20-year period. Meaning over a 20-year period, you're 95% more likely to make more money doing this than buying and selling individual stocks on your own. The good news, however, is that you could literally just throw all of your money into an S&P 500 index fund and make more money than 92% of other investors who are buying and selling on their own.
But even after all this, you pay him just a little bit of sponsorship money and he'll gladly tell you to use wealth funds and pay them their ridiculous 0.25% advisory fee. Oh, and don't forget that you also have to pay them the index fund expense ratios as well. I mean, doesn't he know that his subscribers constantly joke about how he always recommends a low-cost broad market index fund? And honestly, I wouldn't mind Graham's sales pitch if he actually told us how much of his personal wealth was tied up with Wealthfront. But I'm guessing it's not a lot because in this video, he says that he has,
and I have $60,000 spread across several investment apps that I like to try out.
And seeing how Robinhood, Webull, Public also sponsored some of his videos, maybe he only has a quarter of that $60,000 in Wealthfront. But even if we had that entire amount in Wealthfront, that only makes up 0.0046% of his entire $13 million investment portfolio. And besides, do you honestly think Graham would flush money down the toilet by paying that 0.25% advisory fee on that 60 grand that's going to cost him $150 a year? I seriously doubt that because for that $150, he can make $750 of his delicious 20-cent iced coffee. But I think I dragged him through the mud enough, so let's talk about someone else. This time, we're going to talk about Wealthfront's very own Chief Investment Officer, Burton Malkiel, who also wrote a random walk down Wall Street that basically breaks down why technical and fundamental analysis are flawed and how the best thing investors can do is to buy and hold a low-cost index fund. And here he is on Wealthfront's official YouTube page talking about why lower fees are so important when it comes to investing.
You know, there are a lot of things about investing that you can't control. You and I can't control what the stock market is going to do. You and I can't control what the Federal Reserve is going to do and what the bond market is going to do. One of the few things that we can control are the fees we pay on the investments we make and on the investment advisory services.
I mean, he says all that, but why is he working for a stock brokerage that charges you 0.25% advisory fee? Because here's an excerpt from his book, A Random Walk Down Wall Street, that says, although you may pay for what you get in some products, you don't buy any better investment management by paying high fees. Quite the opposite. High fees lead to inferior investment performance. Yikes. And continuing with the video, he goes on to say,
and of course, the quintessential low-fee fund is the index fund or indexed exchange traded fund, and those are the ones that give the highest net returns to the investor, and that's why Wealthfront portfolios consist of nothing but very, very low fee index funds.
Alright, sounds good. And sure, Wealthfront's portfolio is made out of very, very low index fund, but they're still charging you that pesky 0.25% management fee to invest with them when you can simply follow Mr. Chief Investment Officer's advice and just buy a low-cost diversified index fund. Because once again, from his very own book, experience conclusively shows that index fund buyers are likely to obtain results exceeding those of the typical fund manager, whose large advisory fees and substantial portfolio turnover tend to reduce investment yields. So there you have it. Whether it's a personal finance YouTuber or a Princeton professor turned CIO, always look deeper into what people tell you, why they're telling you, and never blindly buy into what they're selling. I mean, is Wealthfront better than not investing at all? Sure, but if you make videos after videos that directly contradict what you're getting paid to say, then I think Graham needs to take a long look at his sponsorship list and listen to his own advice, because once again,
You know what they say, it takes a lifetime to build up a good reputation, but 5 minutes to ruin it.
and to end this video, I think this quote is very important and is a totally legit one from The Dark Knight. It's not about money, it's about sticking to your principle. But as always, like and subscribe if you found this video helpful. Use the link below to get that $50 totally free without that pesky 0.25% advisory fee. And I'll catch y'all next time with more financial shenanigans.